Today we are going to see journal entries for bills of exchange. So this is a scenario 1. The bill is drawn and honored on the due date. So let's see the example. So what is a scenario 1? When the bill is drawn on the buyer and kept with the seller. Okay. So bill is honored by the buyer on the due date. Here the seller is Arun Private Limited. Buyer is Mrs. Tulips and Sons. Okay. So what has happened is Arun is a seller. So Arun has drawn a bill of exchange. Okay. On Tulips and Sons. Tulips and Sons has accepted it. Okay, and on the due date, Tulips and Sons has honored the bill, that is made the payment to Arun. Okay, Arun Private Limited. So let's see the transactions one by one. Date, particular, document number and the amount. Okay. 1st Jan 2017, Arun Private Limited sold goods to Mrs. Tulips and Sons on credit basis for 3 months. So Arun Private Limited has sold the goods on credit basis for 3 months. Then on 1st Feb 2017, Arun Private Limited drawn bills of exchange on Messrs. Tulips and Sons for 2 months. Okay, so he had sold the goods to Tulips and Sons on 1st January, and then on 1st Feb he has drawn a bill on Tulips and Sons for 2 months. Okay, due date of the bill is 1st April 2017. The bill was accepted by Messrs. Tulips and Sons. Okay, amount is 3,50,000. Then on 1st April, that is a due date of the bill, Messrs. Tulips and Son honored the bill and paid the amount to Arun Private Limited. Okay, now let's pass a journal entries in the books of Arun Private Limited. So Arun Private Limited is a seller. Okay, so let's pass the journal entry. So what is the date of the first transaction? Is 1st January 2017. Okay, so 1st Jan 2017. Arun Private Limited sold goods to Messrs. Tulips and Sons on credit basis for 3 months. So Arun Private Limited has sold the goods. Okay, to whom? To Messrs. Tulips and Sons. So the entry will be debtors account debit to sales account. That is, who is the debtors here? Messrs. Tulips and Sons account debit to sales account. And what is our voucher number? We'll put it as invoice number 1055. And how much is the amount? 3,50,000. Okay, so being goods sold on credit. Okay, now the next journal entry. 1st Feb 2017, Arun Private Limited has drawn a bill of exchange on Messrs. Tulips and Sons. Okay, for 2 months. Bill was accepted by Messrs. Tulips and Sons. Now one thing, the bill was accepted by Messrs. Tulips and Sons. This is very important. Okay, unless the bill is accepted by the other party, we cannot pass the entry for bill of exchange. Okay, so in this case we'll pass one entry for bill of exchange. Now Arun Private Limited has drawn a bill. Okay, so for Arun Private Limited, the amount is receivable from Messrs. Tulips and Sons. So for Arun Private Limited, the bill will be known as bills receivable. Whereas for Tulips and Sons, the same bill will be known as bills payable, since the amount is payable by Mrs. Tulips and Sons to Arun Private Limited. So for the same bill, for Arun Private Limited, it will be bills receivable, and for Tulips and Sons, it will be bills payable. Now let's see what will be the journal entry when the bill is drawn and accepted. Okay, so on 1st Feb 2017. On 17. Now it's bills receivable. Once the bill is accepted by the other party, that becomes an asset. Okay, so it becomes a current asset. That is, it is in the nature of your personal account. Okay, so the entry will be bills receivable account debit 2. Now, who has signed the bill? Messrs Tulips and Sons. Okay, so to that extent the amount in debtors will be reduced. Okay, he has signed the bills receivable, so there is a creation of one current asset, that is bills receivable, and there is a reduction in another current asset, that is debtors. So to Tulips and Sons, what is the amount? 3,50,000. And what is the bill number? Bill is 003. Okay, so bills receivable account debit to Tulips and Sons account 3,50,000. Okay, so this will be the entry for the bills receivable. Okay, so if you see, one personal account is created and there is a reduction in the balance of the debtors account. So if you see the rule, debit the receiver, credit the giver. In this case, Tulips and Sons is giving the bill, is signing the bill, so you have to credit the giver to Tulips and Sons account. And bills receivable account, it's an asset, right? So you have to debit bills receivable account debit to Tulips and Sons account. Being bill drawn and accepted by Messrs Tulips and Sons for 2 months. Okay, then 1st April 2017, Messrs Tulips and Sons honored the bill and paid the amount to Arun Private Limited. So let's pass that entry. 1st April 2017. Okay, so Messrs Tulips and Sons has honored the bill. Okay, so and what has it has made the payment. Okay, so what has happened here is we have received the payment, correct? Arun Private Limited has received the payment. So bank account debit, let's see, JV1. Okay, how much is the amount? 3,50,000. Okay. 2. Now there is no balance in Tulips and Sons account. Okay, instead of that, a bills receivable asset has been created. Now on the due date, what happens is Tulips and Sons will pay the amount, and the Arun Private Limited will return the bill to Tulips and Sons. So there is no more asset known as bills receivable which is signed by Tulips and Sons. So we'll be crediting this asset to bills receivable 3,50,000, being bill honored on the due date. Now we have seen the journal entries in the books of the seller, that is Arun Private Limited. Now we will be seeing the journal entries in the books of Tulips and Sons. Okay. Now this is the same example. We'll pass the entries in the books of Messrs. Tulips and Sons. Okay. So on 1st Jan 2017, Arun Private Limited sold goods to Messrs. Tulips and Sons on credit basis for 3 months, 3,50,000. Then Arun Private Limited has drawn the bills of exchange on Messrs. Tulips and Sons for 2 months, and bills was accepted by Messrs. Tulips and Sons. So this is the second transaction. Then the third is Messrs. Tulips and Sons honored the bill on the same date. So as explained earlier, what has happened is Arun Private Limited has drawn the bill of exchange on Tulips and Sons. Okay, so for Tulips and Sons, since the amount is of the bill is payable, the bill is known as bills payable, and it will be liability. Okay, so since the amount is payable on the due date, it is known as bills payable, and it will be a liability for Messrs. Tulips and Sons. So now let's pass the journal entries. 1st Jan 2017, Arun Private Limited sold goods to Messrs. Tulips and Sons on credit basis for 3 months. So Messrs. Tulips and Sons has purchased the goods, correct? So the entry will be purchases account debit to Arun Private Limited. That is, Arun Private Limited will be creditor. Account debit. This is a normal purchase entry. Arun Private Limited account. Okay, and the voucher number, I'll put it as invoice number only. Okay, then the debit amount 50,000. Okay, the voucher number may be different than the invoice number in case of Arun Private Limited. Okay, so that depends on your numbering system and voucher number system. Being goods purchased on credit from Arun Private Limited for 3 months. Okay, this is the entry. Now second, on 1st Feb 2017, Arun Private Limited draws a bill of exchange on Tulips and Sons for 2 months, and the bill was accepted by Messrs. Tulips and Sons. So what has happened is Arun Private Limited has drawn a bill, and then it was accepted by Messrs. Tulips and Sons. So in the books of Tulips and Sons, what has happened is Arun Private Limited has drawn the bill, it has accepted. So for Tulips and Sons, there is a creation of liability, that is bills payable. Okay, but at the same time the balance in Arun Private Limited will get reduced. Okay, so what has happened is one liability, that is creditors account, has reduced, and there is a creation of one more liability, that is bills payable account. Okay, so the entry will be, since there is a reduction in the one liability, the entry will be Arun Private Limited account debit. Okay, we'll put it as JV2 to bills payable account. Now bills payable account, bills payable is showing a credit balance. Okay, that means there is a creation of a liability in the books of Tulips and Sons. Amount is 3,50,000. Okay, so being bill accepted, okay, Now the third entry, 1st April 2017, that is on the due date. What has happened? Messrs. Tulips and Sons honored the bill and paid the amount to Arun Private Limited. So what has happened? We have honored the bill, that is Messrs. Tulips and Sons has honored the bill, okay, and paid the amount to Arun Private Limited. So on 1/4/2017, okay, we have paid the amount of bill, okay. So since the amount has been paid, we'll credit the bank account. And what has happened? Since the amount of the bill is paid, there is no more liability. So we'll be debiting bills payable account. Debit, we put it as JV number 3. Amount is 3,50,000. 2. We have paid the bill, so money has gone out of bank, so to bank or cash account, 3,50,000. So being bill honored on due date. Okay, so that's it. These are the entries in the books of buyer and seller. Okay, so this was a simple scenario wherein the bill was drawn by the seller and it was accepted by the buyer, and the same was honored by the buyer on the due date. Now we'll be seeing some different scenarios regarding bills of exchange. Okay, so this was about the first scenario. Okay, thank you.